Hello guys, welcome back to another video. In this video, we're going to solve the question number 24 from the CBSE sample paper for 2024 for accountancy. This is a sum on admission of a partner where we have Ran Vijay, a new partner getting admitted into the firm. Let us understand and do the basic calculation before proceeding with the sum. The first thing that we should always do is the calculation of sacrificing ratio. We have the old ratio given to us, we have the new ratio given to us. Then we will calculate the share of goodwill of the new partner before proceeding. That makes things easy and the information is ready with us for the journal entries. Let's go to the working straight away. We have the old ratio given to us, which is 3 is to 2, new ratio 5 is to 3 is to 2. Sacrifice is old ratio minus new ratio, which is 5 by 50 for both of them. That means the sacrificing ratio is 1 is to 1, which is equal. For calculation of goodwill, this is valued on the average profit of last 3 years, twice the value on average profit. So the average profit is coming to 1,50,000, the average of these three amounts. Firm's goodwill is twice that, that means 3 lakhs. Ranvijay's share of goodwill is just one fifth of 3 lakhs, which is coming to 60,000. All right. So having these information ready with us, now we can straight away jump into the journal entries. We will follow the method of picking up the item as we go along and pass the journals. That makes things easier and saves time. Also, we don't have to jump around looking for information. Let's see. The first one that we have, capital accounts. Again, the balances are given. We are not preparing capital accounts here, so we don't have to do anything as of now with this. We have current account balances. Now, as soon as you see current account balances, you should understand this is a fixed capital method and the journals for adjustment to partners capital account will be using the current accounts. Okay. Creditors and general reserve we have. Now general reserve as per the rule should be distributed among the old partners in the old ratio. In the additional information as well, we don't have anything mentioned about keeping the general reserve as it is or not distributing that. So we will be going ahead and distributing the general reserve. Journal entry for that is general reserve account debit to Rajinder's current account to Vijay's current account. 60,000 is distributed in the ratio 3 is to 2 among the old partners in the old ratio. Moving on to the asset side, we have fixed assets, then we have goodwill. For goodwill as well, the rule says straight away, if you have goodwill in the asset side in the balance sheet, you have to write it off by debiting it to partner's current account and goodwill account will be created. So Rajinder's current account and Vijay's current account is debited in the ratio 3 is to 2 to goodwill account 50,000. All right. Then we have investments, stocks, debtors, and banks. Straight away, we don't pick up anything until unless anything is mentioned. So let's look at the additional information. The first one talks about provision for doubtful debts is to be increased to 6% of debtors. 6% of 1 lakh is 6,000. We have provision of 4,000 here already. So we have to increase the provision by 2,000 and it's a liability. So provisions account will be created to provision for doubtful debts 2,000 here. Okay. Next, number B, an outstanding bill for repairs of 50,000 to be accounted in the books. This is also a liability. This will be created as well to outstanding bill for repairs 50,000 and both of these will be debited to revaluation account 52,000. Okay. Number C, an unrecorded interest accrued of 7,500 to be provided for. Now this is an asset, so this will be debited. Asset account is debited when there's an increase. So accrued interest account debit 7,500 here. Okay. Then what do we have? Number D. Investments were sold at book value. Straight away a normal journal for that. Bank account debit to investments account 40,000. Okay, that is the book value we have. Straight away sold it off and the journal entry passed for that. Next, number E. This is an interesting one. Half of the stock was taken by Rajinder at 42,000. Okay, stock is valued at 74,000. Half of that comes to 37,000. So he's taking over the stock at an increased value of 5,000, which is a profit for the firm, and that profit is transferred to revaluation account. So the journal for that is Rajendra's current account debit to stock to revaluation account. So 42,000 is debited to Rajendra's current account. Stock account is created by 37,000 and the 5,000 profit is credited to revaluation account. Okay, straightforward. And the remaining stock was also to be valued at the same rate. That means 37,000 remaining half is to be valued at 42,000 as well. For that, that means the stock account to be debited by 5,000, another increase in the value of the stock, and that remains in the balance sheet. So stock account debit by 5,000 and total of these two is credited to revaluation account of 12,500. All right. So stock is done. Now before moving on, there are no more revaluation adjustments. We need to calculate the profit or loss on revaluation. We have 52,000 debited here in revaluation. Then we have 12,500 credited here and another 5,000 credited here. So all in all, we have a profit or loss of how much? This will be a loss of 34,500, which is to be distributed among the old partners in their old ratio. All right, 34,500 is the loss. Rajinder's current account debit, Vijay's current account debit to revaluation account. Okay, having done that, now we come to the next journal where the new partner Ran Vijay is bringing his share of capital and his share of goodwill. So bank account debit to Run Vijay's capital account 1 lakh, to premium for goodwill account 60,000 as we calculated at the beginning of this video. So total amount brought in is 1 lakh 60,000. And as you know, premium for goodwill is to be distributed among the sacrificing partners in their sacrificing ratio, which we have already calculated as equal between Rajinder and Vijay. So premium for goodwill account debit to Rajinder's current account to Vijay's current account. So these are the list of journals that are required to be passed here. If you have any questions, do let me know in the comment box below. If this really helpful, then do hit the like button and do share with your friends. We'll catch you all in the next video. Thanks for watching.